Anyway, that said, Kyle, welcome.
Thank you, Brian. I appreciate it. Thanks for the intro. I am super excited to be here, super grateful. So thank you for having me.
Awesome. Yeah. And thanks for being here and sharing your time with us. So first of all, if you wouldn't mind, would you go ahead and tell us about yourself? Give us an idea of who you are, where you come from, and what led you into multifamily.
Yeah, sure. So born and raised in Southern California. I actually now live in Scottsdale, Arizona, where I moved about 7 months ago with 6 months ago with my wife.
Mhm.
And the sole purpose of that was to continue to grow and expand our portfolio out here. This is where most of our properties are. And I am very big on relationships. I'm very big on understanding the market that you invest in. And so we moved here to build those relationships and to get to understand the market here a little bit better. I love the fact that I'm boots on the ground now, so I can drive to any of our properties. I can drive properties that are off market and get back to brokers the same day if I need to. We are starting to branch out a little bit into the Dallas Fort Worth market, but have boots on the ground over there to cover that. But I started investing in 2010 in single family homes, which is where a lot of people get started. At that time, I had a W-2 job. I was a regional manager for a golf management company, and I worked in the golf business since I was 15 years old. I actually never thought I was going to leave the golf business. And I got burnt out kind of in 2014 and 15 pretty quickly. And I started looking for some other things to do. Single family homes is a great start for me. But after I got up to about 10, I stopped investing in those. I didn't see the scalability in them. So I started looking for something different. And it took me really 2 or 3 years to kind of find what I am now into, which is multifamily syndication. I looked at different things like buying a franchise, just starting up in a brand new industry, buying a business, starting a business. And none of those things kind of clicked until I found Michael Blanc's online course, and I took it. And 11 months later, I left my job to pursue it full time, even before I had gotten a deal under contract. And it was really because I fell in love with the business model. It was something that I did a lot in the golf business. A lot of people don't relate those two to one another, but I was on the management and operations side. So creating budgets, keeping track on budgets, projects, hiring and firing people, managing systems. And so that's what I did for 15 years with American Golf.
Mhm.
And so I naturally progressed over to the asset management side in the business on multifamily. And like I said, I just absolutely fell in love with the business model of it, left my job in 2017 and have been doing this full time ever since.
All right. So a couple of questions there. I mean, you said you joined Michael Blanc's program. Incidentally, I'm also a Michael Blanc coaching student graduate. But can you talk about the importance of mentorship or just the education in general, and how that helped you in your journey?
Yeah, absolutely. I think it's necessary in multifamily. I think in single family homes, you can definitely get away without having a mentor. Although having a coach or a mentor, regardless of what you're doing, will get you there faster and probably with a lot of less downside risk or risk involved in it. But with multifamily, you are literally managing a multi-million-dollar business. There's no ifs, ands, or buts about it. I think a lot of people miss that piece of it. You're buying a business, and there's people there every day. There's safety risks. There's economic risks. There's all these different moving pieces, and if you don't understand how to run a business, then you're going to let some things slip through the cracks. So having that mentor or coach guide you through those things before you really get started was crucial for me. Even though I knew a lot about how to manage businesses, there were so many pieces I needed to understand about how multifamily worked, whether it's from fair housing laws or even on the other side, raising capital, finding deals, building relationships, picking and understanding a market and why, how to talk with investors, all those things. So very crucial. But even the best athletes in the world have coaches and mentors. They're very good at what they do, obviously. Why do they have mentors? Because they want to keep excelling, they want to keep growing. And really, the more you surround yourself with people who are doing what you want to be doing, the faster you're going to get there. And like I said, you also reduce your risk by learning from people who have done it before.
Yeah, absolutely, absolutely. And I wholeheartedly endorse. I just the whole mentorship, aspect in general. Whether it's through Michael Blanc or a different program, it's make sure you have a reputable mentor first of all. But I think you what Kyle said is absolutely what I felt as well, is it accelerates your growth, and that's mentorship in general. But all right, I guess Michael Blanc, mentorship commercial over. But so next thing I want to hit on is, you say you quit your job before your first asset was under contract. Can you talk about that decision-making process? Because a lot of people are, having similar, I guess, conversations with themselves. Do I quit my job now? Do I quit my job later? I eventually want to go full-time. When's the right time? Can you go over what went through your mind and how you made that decision?
Yeah, it wasn't an easy decision, and I don't think that there's a right or wrong way, because obviously there's life circumstances that you have to take into consideration as well, right? At that point, I was dating my wife. We were engaged, but I was not married. We didn't have kids. I wasn't tied down to a certain area or location, and so I did have some flexibility. However, I was about 36 when I made the decision. I knew that my time was running out to make a decision to go from W-2 to entrepreneur, essentially. I had been a W-2 worker my whole entire life, so that paycheck meant a lot to me. Mm-hmm. Looking back now, it was a big mistake to hold on a little bit longer. But the thing that actually did it for me, I'm a big Tim Ferriss fan, and so I love his podcast, love his books. And I was reading the 4-Hour Work Week, and he has what's called a fear setting exercise in there. And if none of you have seen it, it's very powerful, and is what allowed me to make that decision. I'm very conservative by nature. I don't take huge risks, or didn't take huge risks. Maybe some people think I do now by buying apartments, but I never was that type of personality. And his fear setting exercise is essentially asking yourself multiple times, what is the absolute worst thing that could happen if you do this? And then if that happens, what's the worst thing that could happen? And when I was honest with myself, the worst thing that could happen by leaving my job and pursuing apartments was that I would have to go back and get another job in the golf business, which I could get in a week. And so I was literally sitting in my worst nightmare. Now, would I have a couple $100,000 less in the bank? Maybe. But regardless, I was in a position where I was probably working until I was 65 or 70 anyway. So I didn't really look at that as a huge risk. And so I was sitting in my biggest fear. And that's when I immediately realized that I needed to do this, because regardless, I could be back there any day, you know? And so that was a huge mental hurdle that I got across by reading that book.
Yeah, I love that. I love that exercise. I mean, just the idea of what's the worst thing that could happen. And I mean, I just finished a 20-year career in the military. Most people know that, but around year 10 to 12, I was kind of in that almost afraid to leave mentality. And part of me wishes I stumbled upon that same book and that same exercise, 10 years ago. But I'm okay where I'm at now. But it would allowed me to potentially chase my dreams a little bit earlier. I always knew I wanted to get into real estate, but wasn't quite ready for it at the time. But I like that. So Tim Ferriss, what was the name of the exercise or the book again?
4-Hour Work Week, and it's the fear.
Oh, it's in that book. All right.
Yeah, his fear setting exercise.
Okay. That's a book I have not purchased yet. I've read the Cliff Notes.
It was interesting. It took me like 4 years to read that book. I just couldn't get through it the first time. I wasn't ready. And it's interesting. People say, the master will appear when you're ready, or whatever that quote was. And in that scenario, it was perfect, because I didn't get that book when I first started reading it. And a couple of years later, I picked it up. It was at that point, and I needed that exercise to kind of take me to the next level. I'll
tell you what, I read Think and Grow Rich when I was in my 20s. And after one chapter, I literally threw the book across the room, because it was not that the book was bad. I think you hit the nail on the head. I wasn't ready for the concept in that book. I was like, you can't just think your way to a millionaire. I mean, that doesn't work. Like I said, literally threw the book across the room. It was before Kindle and everything else. So I was, reading real books. But yeah, I like how you said that, when you're ready, the master will appear. I guess that's I don't know. I always see it on like Japanese karate type movies, but I don't know who that quote's attributed to originally. All right. So yeah. So you went through what was in your mind before quitting and doing this full time. Um, Anything you do differently if, you had to do it all over again, knowing what you know now, and going back to that decision point, would you do anything different?
Um, I would have left earlier, and I know that's a cliche thing to say.
Mhm.
I was terrified out of my mind, and I should have left earlier. I was miserable in my job for a couple of years, but I also may have not have found multifamily. When I found multifamily, Michael Blanc was just starting out. And so
Mhm.
syndication had just been the new buzzword. And so if I had been looking a year earlier, I might not have gotten into it. But, you know, if looking back, I would have gotten started in multifamily in 2012 and when I
Me
was
too.
buying single family homes because
Yep.
I'd be in a much different position. But I'm really grateful for everything that I learned in the golf business. And a lot of what I do today is because of what I learned. And I learned the bulk of it at one of the properties that I worked at. It sat next to the Rose Bowl. And I did a lot of the operations during their events. And so that's where I learned a lot of my management skills. And that was between '08 and 15. And so I learned a lot during those times. So, I'm grateful for the place that I am right now.
Perfect. Perfect. Yeah, I think that's a common trend as well. Whenever I ask people, either on this forum or podcast, what would you have done differently? I think most people have the same answer. I would have quit a little earlier. I would have gone full time in the business a little earlier. But that said, so you quit your job. I think you said 2017. Walk us through, broad level brushstrokes. Your first deal or two, and then we'll get into asset management.
Perfect. Yeah. So about 2 months after I left my job, we got a deal under contract. So January 2018, it took us about 5 months to close. And I just happened to be driving to Tucson when a broker said, "Hey, I got this listing. You want to come take a look at it?" I was the first one to see it. Ended up getting that under contract. It was a 42 unit in Tucson. We just sold it this year, actually. So it was a great investment, great first starting property that I was a lead sponsor in. And as Michael says, art of the first deal, it happened to me 3 weeks later. We went from a $1.6 million deal to a $15.1 million deal in Phoenix. 3 weeks later, got that under contract and then closed that about 4 or 5 months after getting that under contract. So it does happen.
Mhm.
It happens in waves, but then, we went 13 months between our second and third property as well. So there are some ups and downs through this entire journey. It's not
Yeah.
all ups, even after you get your first couple of deals. There are definitely ups and downs throughout.
Yeah, and a lot of the first deal, I mean, it worked with us too. I mean, we had our first deal under contract, and I think the biggest difference for us was brokers took us a lot more seriously once we had, once I think I took a screenshot of our bank account after our capital raise was done, and sent that screenshot to a couple of brokers, and all of a sudden, we had more deals than we could look at, so just that credibility, that there's a lot to say about that credibility. And that's why that law of the first deal works. People who weren't giving you the time of day before, all of a sudden are like, hey, look, these guys are credible. They can close. Let's give them a chance. So I think that's probably the most significant jump I've seen between first deal and second deal. 1 point something I think you said 1.6 to a 15 million. So you basically 10x your first deal. But yeah, and then I'll echo what you said. For us, our deals have come in clumps. It's not. I wish it was a lot more consistent, where every 3 months, like clockwork, we could get a new deal and close on another. But for us, it's come in clumps as well. But um, so what possessed you, or what? I guess that's a good word. What possessed you to start the Asset Management Summit and write a book on asset management?
Yeah. So, at that time, my partner Gary and Lipsky and I were looking for a niche in the market, and we both have management and operations experience.
Mhm.
And we did see all this education out there, which is all important, right? All the things that I'm going to talk about right now are extremely important. Finding your first deal, picking your market, how to underwrite deals, how to raise capital. But that's all on the front side of the transaction. And so there was nothing being taught about the backside of the transaction. Once you close on the deal, how do you execute your business plan? How do you run that business? And that's what I have experience in, right? And that's the part that I'm most passionate about, is kind of that execution of the business plan and closing on the deal. And so for me, I actually had to learn a lot on how to build relationships, how to raise capital, but I knew a lot about the management side. So naturally, we gravitated towards that. There wasn't any conferences on asset management. It really is the boring side of the business. You know, it's not like, hey, let's go look at the numbers or talk to the contractor is the most exciting thing. But it is definitely something that if you excel in, you can really get more value out of your property and make your investors a lot more money. So just naturally attracted myself towards that. When COVID hit, it was perfect timing to start writing the book. Because we weren't sure if we were going to buy any more for a while. So we kind of hit pause for about 3 months. Obviously, you weren't leaving your house. We lived in California at that time, so it was very strict lockdown. So I just started writing the book, and 15 months later, it was done. So it was quite a long process. There's companies out there now that will write it for you, essentially, but we wanted to write it from our own experiences, and so we took it under, and I think it came out well. I can see definitely a version 2 coming out eventually. But proud of the book for sure. And I think it's much needed for people to understand that management operation side of things. Oh, I can't hear you, Brian.
Because I hit my mute button while I was
There we go.
tinkering around with things. But incidentally, I dropped a link to the book in the chat. But there's a couple of what now moments that I find a lot. You know, I think when people get their first deal under contract, there's always this, great what now. But I think the same thing a lot of times happens when you close on a project. You put all your effort into closing, and then it's like, great, what now? I think the book answers that question. But if you were to sum up, the biggest lesson you've learned in asset management, what would it be?
So the biggest lesson I've learned so
Yeah.
far in asset management. Ooh, that's a good question. Sorry, I'm trying to think of the perfect answer here.
Yeah. Put them on the spot right there. So
Yeah. So yeah, I will say that with property management and asset management, I think a lot of people think that you need to micromanage in order to be a good asset manager, right? And some of the things maybe we'll talk about today are not. Some people may think I'm too hands-on or micromanaging. My job as an asset manager is not to micromanage, and I actually would prefer not to micromanage. But there are certain things that you need to take the bull by the horns if it's not going well. We're managing investors' money. But the number one thing I've learned is that you really have to work with your property management company as if they are a partner and not that they're your employee. And I think you get much better production out of them, because if you work with them as a partner, you're actually making them better. You're making the property management company better if you're implementing the systems together, and you can work together to find that resolution, right? So it's not me demanding things like this. It's more opening it up for conversation and saying, how can we resolve this issue? Or let's look 3, 6, 9 months in advance instead of, being reactive and looking at something today that already happened. So really working together with your property management company as a partner.
all right. I love it. I love it. You're treating property managers like a partner. And realistically, I think you'll agree with this statement. I think the property manager is probably the most important, component of asset management, because they're where the rubber meets the road on a lot of things.
Yes, although I would say right now it depends, because our property management company that we use actually has in-house general contracting. But right now, with the labor shortage, with material shortages, I definitely think that the rehab portion of that is a challenge. I think a lot of people are going through growing pains with it, and is something that needs to be paid attention to as well. In our situation, it is one and the same, because we use our property management company for rehabs. But that's an area that has been a challenge for sure.
All right. Now, Daisy just threw in a really great question. I think it's perfect time for this one. What question would you ask now of a property management company that you wouldn't have at the beginning of your journey? And Daisy, just to clarify, is that in vetting property managers? Okay. Yep. So in vetting property managers, what questions would you ask now that you wouldn't have thought of at the beginning? Like
going through this right now, what is your 5, 10, 15 year strategy? We actually have a property management company that sold to a larger company. And I've been a part of, in the golf business, sales of our company. And they seem to have the same type of pattern of restructuring things, cutting more
Yep.
resources, and really tightening things down so that the field level employees and staff really feel it the most. And
Mhm.
unfortunately, when that happens in apartments, that's your property management team on site that's really feeling the tightening, and
Yeah.
that affects the property's performance. And so, right now we're going through that, and there has been some growing pains because they're restructuring. The current ownership is phasing out, so they don't necessarily have as much skin in the game that they used to, or maybe desire or passion for it. And so we're going through some growing pains with turnover and transitioning of infrastructure.
Okay. Now, interesting. So one question, I mean, without asking that question, is there any telltale signs of somebody who wants to potentially sell out to a bigger company that you can think of? I mean, go ahead.
Maybe. So there was a restructuring of the company where one of the partners left.
Mhm.
And so maybe that was a sign that something was going to change. Other than that, I'm not really sure. But what we would have done differently looking back is left that company sooner versus waiting to see what would happen. I just think that I'd rather go with a company that has solid infrastructure, not planning on a bunch of changes versus, you know, who knows what's going to happen. Because again, these people are managing your multi-million dollar asset, they're
Right.
managing your investors' money, your business plan. And so you have to go through those growing pains with them if, that's the case. So that's what I definitely would have done differently.
All right. Yeah, I like it. Solid, solid. One of the first property managers we had, and unfortunately we cycled through a couple of them, but the very first property manager we had a big personnel shakeup right when we closed on our first property. And it was, I know it was a headache for them, but it was also a really big headache for us too, especially on, number one, property number one, just not getting the same property manager, having to make new relationships. And I think same thing, I wish we would have, had the foresight to leave that relationship earlier, because a lot of changes inside management companies may not always be good for their customers. Um,
Mhm.
so looking at asset management, where would you say the asset management begins, or let me phrase that a little better. Where would you say the role of the asset manager begins?
Yeah, as soon as the property is under contract is when
Mhm.
we start our asset management piece of it. We want to make sure that on day one, when we're closed, that everyone understands what our business plan and
Mhm.
execution looks like, so that you're not waiting around for weeks to put a plan together and then to start it in month 2 or 3. We're starting it even before we close on the property. So things like name changes, if you're
Mhm.
painting the property, the colors being picked, the signage being ordered. In Arizona, you have to request for a name, and sometimes it can take a few weeks.
Mhm.
And so all those things are being done before. Now, do you have to outlay some capital that's more at risk now if you don't close on the property? Yes.
Mhm.
But at a certain point, we know when we're going to close on a property, and that's after due diligence. Can something happen? Certainly, but we want to make sure we're starting right off the bat. But at the very least, we're walking units with our general contractor. We're getting the full scope of work. We're
Mhm.
getting quotes for the scope of work, so we know how much it's going to come in at. We'll add some contingency. And then our property management knows on day one, this is what's happening with the open units.
Mhm.
And our typical business plan is not to vacate and then rehab everything. We just naturally turn over units and then rehab them there. So on day one, we like a lot of vendors to start work,
Mhm.
and I think a lot of operators will wait to form that business plan after they close, and essentially you're losing a month or two because of that.
Yeah.
Even getting on the schedule right now for things like paint or asphalt, or anything, they're months and months out right now. And so you may think that you can get something done in month 2, but if you're not scheduling it before you close, it could be 6 months down the road.
Yeah. And I mean, we have properties in the Southeast. You mentioned labor shortage where you're at. We're seeing labor shortages in the Southeast. I've got a couple of, local developers that I, have a monthly lunch date with. But they're saying the same thing in Idaho Falls here, that there's a big shortage of work. So keep that in mind, and I think Kyle gave some really, really good tips there. make sure you're planning that ahead of time. And if you can, I mean, if you have, 60 to 90 days to close, depending on your contract length, you may not know exactly when the close date is up front or exactly when day one is, but you can start getting on their schedules, and they can start looking at the properties, getting the estimates in and everything else. And that really, really helps things go a lot faster once you close. So you don't lose that month or two by waiting. Now, if you have a separate asset manager and an acquisitions, specialist, what's the do you guys put dividing points between roles, or or do they just need to work together through everything? What do you suggest on that one?
Between the asset manager and who now?
And
Sorry.
the acquisition specialist, if you have two different people or
Yeah,
groups.
that's all me.
It's all you. So yeah.
We have a team of people and we kind of split the duties a little bit, but right now what I'm in charge of is acquisitions and asset management to a certain point. I moved here in order to grow our portfolio, and obviously I'm boots on the ground in Arizona, so I would be in charge of the acquisitions, and I'm already out driving around, so I can stop by our properties at any given time. So it is convenient on that side of things. I will tell you that after you get to 3, 4, 5 properties, it becomes very, it constrains you a little bit. And so we are looking to hire on an asset manager. And my job will be to put the systems in place, which they already are in place, but to train that person on those systems and then hold that person accountable for those things. So I can kind of take my hands off the wheel a little bit on the asset management side while holding someone accountable and driving it home. But I do think eventually you should have 2 separate people, and they will work together in some aspects as far as the business plan, because the acquisition person is going to see the property. Maybe they're in charge of underwriting or overseeing underwriting, and that ties hand in hand with the execution of the business plan. So they will work hand in hand with each other on certain things.
Yeah. And we have a separate asset manager than our acquisitions guy. And I'm not saying we do it the right way, but when we're doing due diligence, they're both there, and they're both working budgets together. They're both working estimates, but they have a slightly different reason for doing it. Our acquisitions manager is looking at how much cash do we need to close, making sure that the money's all in the bank at the right time. And at the same time, the asset manager is taking those same requests in and putting them on the calendar and working with the vendors to get everything lined up, working with the property manager for slightly different reasons. But not saying it's the best way to do it, but it's the way that we do it. So so one question that a lot of people ask me, and I'm sure you get it a lot, KPIs, key performance indicators. What are the things that you think are most important as far as KPIs while you're as an asset manager?
Yeah, the obvious stuff for me is like lease tradeouts, right? We want to know that the lease that just moved out is trading out for X dollars on the new lease, and we want to make sure that's positive. And that definitely depends. When you first take it over, you're going to have higher lease tradeouts than once you're stabilized, but we want to make sure that new leases coming in are not going for less than what they were renting out previously. One thing that's really important to us, and I mentioned it earlier, was the renovation piece that we're tracking KPIs on now. And that's mainly how quick are we turning units, whether it's just a regular turn, which you want to see done in 3 days or less, or a full renovation. Obviously, depending on the scope, we want it done in 21 days or less. And that has been a challenge with the labor shortages, people getting sick with COVID. So these are not excuses. They're real life challenges that we're dealing with. And unfortunately, we've seen some of those renovation time periods go to 30, 40 days, depending. And so one of the things we want to know now is how far out are we for certain materials, like appliances, for example, cabinets, for example. And we need to come up with a schedule with our GC or vendors on when we need to order those based on the notice to vacates and move outs coming in. So we're really trying to track that carefully right now because, like I said, we've had some of the biggest challenges on that piece of it is the renovation management piece, because there's been so many moving parts, but also COVID and the labor shortage and material shortage have really put a wrench into different things. So that's another thing. Neil Bawa talks about LASL. That's another thing that we track is just leads coming in and then the conversions in between each section, whether that's leads to appointments, to showings, to applications, to leases. The reason why you want to track all those different areas is so you can identify the bottleneck. You want to know, hey, do I have a bunch of bad leads, or do I not have a closer for a leasing agent?
Yep.
And those are two very different sides of the spectrum there. If you just have leads coming in, they're not being converted, there's no way to identify where the real bottleneck is. And that's what asset management is creating systems to be able to pinpoint certain bottlenecks so that you can fix them immediately versus having to guess, right? And so that's what KPIs are used for. And so those are some of them, the ones that we constantly track. Also, where the leads are coming in from a marketing perspective. We want to make sure we're spending our dollars in the right place. Apartments.com is a big name, but if we don't get any leads from apartments.com, is it worth $1,000 a month that it costs, or $2,000 depending on the size of your property?
Yeah.
We found it is worth it, but that's something that we want to know is worth it versus just paying for something just to pay for it.
Yeah, I like that. And I think different websites or different things are more viable in certain areas. I've lived in Southern California. When I lived there, everything was done on Craigslist for almost free. You could throw something on Craigslist and get it rented out a lot faster than a lot of the bigger websites. But if you're tracking that, you can actually figure out where your dollars are working and where they're not. And just a quick follow up. We started having a property manager track all of that. They weren't previously tracking it, and I wish we would have asked that question earlier. But they weren't previously tracking that stuff. But after our occupancy started going down and down, we found out where the broken link was, and we were able to really quickly fix the broken link. And very, very, very important on that one. All right, so you mentioned this earlier, and this is a question from the chat. You said your property management company right now is vertically integrated with construction. What did you say? It was always that way from the beginning, or did you guys have a different relationship earlier on?
It was, and actually now they're moving away from that. So they will not be vertically integrated with that piece. And so we're having to outsource a lot of our renovations at this point. Okay.
Now, is your property manager planning all of that? Or are they the ones that are, scheduling and doing, inspections and everything else with the general contractors, or is that something you're doing as asset manager?
Yeah, so it was something our property management company was doing. Unfortunately, we found out that they are not qualified to do that in some aspects. And, the manager was not trained appropriately. So do we oversee that? Yes. And do they check off on renovated units? Now they do, but we walk through the unit. So every time I go to a property, I walk every unit. And my property management company hates it, but I walk through every single unit, right? Vacant, just turned, just vacated, whatever it is. I want to look at it. And again, this is not me micromanaging. This is because I like walking through the units because conversations come up during those walks, right, with the property manager. And so I'm able to help identify certain things where maybe he or she needs to improve upon, or we talk about certain things, and maybe our business plans slightly changes based on the feedback she's providing me as well, because she's there every day, he's there every day. He knows the property, she knows the property a lot better than I do. So we walk around, we'll go into units, and I get feedback from them, but I also want to see the quality of the work that's being done. And if they're going to sign off on something, they need to know what level of quality I'm expecting, right? And so if things are crooked, not painted fully, not clean, and that's a rent-ready apartment, we can have that discussion then and there. And I'm telling her, look, this is what I would expect if I was a renter. Let's make sure that we don't sign off on this apartment until X, Y, and Z is happening. And so that lets them know what my expectation is. It also lets them know that I'm checking and looking for those things. And it's just part of holding someone accountable. Unfortunately, when there are people involved, you're going to have some good people, you're going to have some not so good people. And there has to be some layer of accountability, or else that's when all the wheels fall off.
And that's something that's one of the benefits of you living in the market. People always talk about boots on the ground, but that's really why the boots on the ground piece is important, is because you can get into those units. You're a short drive away from all of your properties, and so you can get to those units on the turns. And I would imagine if it's planned right, I mean, the property manager is going to go out to the property anyway. And it's just a matter of scheduling it when you guys can both go. It's not an extra trip for him or her. I think you said her. But I think that's solid advice right there. You get in, and ultimately saves a lot of time too, because now the property manager doesn't have to go to the property, pick up the phone and call you and say, what about this? What about that? Because you're right there on the spot too. So lots of really, really good advice there. Um, all right. So when we talked about when asset management begins, KPIs, um, what about the back end of asset management? I mean, when you're, if you have a 3, 5, or 8 year hold, what's the role of the asset manager getting ready for that sale in that last, say 12 to 18 months of the property?
Yeah, it's extremely important, right? Because holding a property for cash flow is much different than setting it up for sale.
Mhm.
And the way we do things is we'll stabilize a property and we will always evaluate where the market is at that time. And
Mhm.
then just talk to our brokers about what the property is worth and valued at. And maybe you had a 5 year horizon, but the market improved like it did over the last couple of years and you exit in 23 months like we've done before.
Mhm.
Maybe you look at a refinance, but you always want someone looking at where you are in the market, right?
Mhm.
And if you can, I always say, if you can get the velocity of your investors' money working better, then maybe you do sell a little bit earlier. It comes down to the velocity of our investors' money is how we make decisions on that. But getting the property ready for sale is something that is strategic, and
Yeah.
you want to talk to brokers about where things are in the market, what types of renovations you want to have. You need to leave some meat on the bone, but what type of meat is that on the bone? Because things change. And so, at one of our properties, I've got a great example. The business plan was to renovate all 42 units
Mhm.
and then implement a premium level when we wanted to sell. And that wasn't until year 6, essentially, but we did it in year 2 because
Mhm.
we had raised rent 7 times. We had gotten through all of our renovations. The market had strengthened. And so we called our broker and we sell with the broker that sold us the property unless they're not no longer in the market or they're
Mhm.
just not a strong broker. And we said, hey, look, this is what we did to the property. What do you think? Tell us, give us your feedback, and what do you think we should do? And he told us, hey, I think you should have met that premium level unit right now. So we implemented it. We did 5 or 6 of the units, rented it up immediately for $100 more. And that was our exit strategy now, right? The next buyer of this property can come in, renovate the remaining 36 units, and that's their value add. And so
Right.
you're positioning the property for the next buyer.
Right.
And that's going to be done at the end when you're selling it, not during the stabilization phase. So really important from an asset management position to make sure you've got enough cash in the bank to execute your exit strategy, because that
Mhm.
costs money sometimes as well. And what you're renting things for and the market rent and what your T12 or at least your T3 NOI looks like. Is it time to sell? You need to make sure all those things are stabilized.
Yeah. And I mean, I think you look at it from a buyer's hat as well. What are the big, red flags as a buyer when you look at things, and I say, if income's going like this all over the map, that's always going to make you scratch your head and wonder. But, um, I mean, so from the asset manager perspective, a management perspective, you want to basically put that property in the best position possible when it's time to sell it. And you're coordinating with the brokers, getting the broker's opinion on, hey, what can I still do between now and 3, 6, 9 months from now when I want to sell it, and where's the market currently. So I like that. And maybe a little bit of a selfish question because we're starting to market a couple of our properties for sale right now, but um, which is fun. I mean, knowing that you're coming, full cycle on your first 1 or 2 deals. Wow, good place to be. But all right, we're about, let's see, 10 minutes to the top of the hour, so let's open up for questions right now. There's one in the chat that I didn't quite get to yet from Mauricio. What's a common piece of advice you hear giving out about partnering, property management, or asset management do you feel is wrong, just not good advice?
Yeah. One of my biggest pet peeves, and you don't see this too often, but one of my biggest pet peeves is when I see someone post saying, hey, I just got a new property under contract in XX market. Does anyone know any good property management companies? So it's selecting your property management company after you found the deal.
Yep.
And that's essentially lazy asset management or lazy management, because you don't want to go through the process of selecting that property management company before. But remember, this person is executing your business plan. They're in charge of all that money. And there are markets where, even big markets, where there are no good property management companies. And so it doesn't mean you don't want to invest in that market, but you want to know going in that that's a challenge that you're going to need to face. And so selecting a property management company based on necessity is a huge mistake, in my opinion. And you really need to spend the time to vet out your property management company. And look, we're going to be going through a turnover to a different property management company. It happens, but you want to be able to vet them to know you're selecting them the right way in the front end. But then you also, through that process, will have backups that come up over time as well, right? And so that's come in handy for us. So that's definitely one thing. From a partnership standpoint, I think a lot of people partner with people just to get deals done. And I think that you really do need to select your partners carefully, just like with property management, right? These are 5+ years of marriage, essentially, and you're going to be working with that person day in and day out. And you want to make sure that that person has the same values and mission and vision that you do in alignment, but also have complementary skill sets. I think that's something that a lot of people just hop in, they're going to do a deal and then think about what the skill sets are after. I definitely think pairing the right skill sets together allow for greater scale if it's done the right way.
All right. Good, solid answers and really good question. I think that was Mauricio's question, right? Yeah, that was Mauricio's question. All right. I'm going to change the view. I think everybody can pick their own view, but change the views a little bit. So if you have questions from here, 2 options, you can throw them in the chat, or turn your camera on, take yourself off mute, and just pipe up with a question. So what are the questions do we have for Kyle about asset management, or actually really anything?
Ryan, do you mind if we ask something real quick?
I don't mind at all. I highly encourage it. Thank you very much.
Great. Okay, so both of you guys, we just closed on a 48 unit like 2 weeks ago, and we want to hear what advice we could get to really kickstart this on the back end systems. We talked to one person, they're using G Suite for communications, kind of just overall keeping track of the construction. And we're doing renovations on everything. And I think we're starting off with about 3 units right off the bat. We're going down about once a week to the property and meeting up with everybody. What are just some things, some advice you'd have just to make sure we're on the right track?
Kyle, I'm going to let you take that one. I'm not the asset manager for our company. So Kyle, that's all on you.
Yeah, one thing that I like to use is a tool called Trello, and it's just a project management tool. And I think it's important just to have some type of project management tool that is able to be shared between you and the team, and that's in real time, right? And so getting your weekly reports is great on your calls, but they're not real time. You have to wait for them once a week. And so having a tool where I can just pop into my Trello board right now and see if something's being done that is updated while we're literally talking on our Monday calls. So my assistant sits there and listens. And if someone says, yeah, the contractor will be giving us a bid, I ask, well, when are they going to get the bid by? Friday. Okay, that is notated in the Trello board. And so now I can see if something's past due or not, or it's really just a reference point for my next conversation with them. But we're also doing that for renovations as well. So, with smaller buildings, it's much easier. With larger buildings, it is a little bit more difficult to get the property management company on board. But if you have 3 units under renovation right now, I'd like to know what kind of process they're in. Are they just in the clean out phase? Are they being rehabbed? Are they due on a certain date? And then when they're finished. And so I can check in on the Trello board. So, there's other tools, Asana, Click, and there's a couple different ones. We use Trello because it's extremely simple. You have a card, you can move it from one phase to the next. And I think a lot of property management companies or contractors are just not as computer savvy. And so what we tried to do was find the simplest tool to be able to train them on. So it's not overbearing or overwhelming for them to get trained on it, because there's certain tools out there that are much better, but they can be overwhelming for someone to get started and use. And so we're trying to go with the most simple tool so that the training piece of it is much easier.
So you'll actually have the construction, contractor go in and manipulate that as well.
Yeah, so essentially we have a board for each property, and the property manager, our whole GP team, the general contractor, the regional manager, they're all on that board, and it gets updated by multiple people. Tasks get updated by my assistant, but the on-site property management manager needs to make notes in each of those cards saying where they are in the process. And then for the renovation piece, we haven't perfected it, but the general contractor is supposed to go in and update it where he or she is in that process. So we found it to be very helpful when it comes to making sure everyone's held accountable for the jobs and the duties that they have committed to.
Okay, thank you.
You're welcome.
All right. Now I've got a follow-on question. Have you gotten resistance from property managers or general contractors about doing that?
Yes. Short answer, yes. It's not easy. Yep. And the thing that I always have to keep in mind is that they're very busy at the property, right? They've got a lot going on. And one of the things I think a lot of people try and save on is payroll. Like, oh, can we cut payroll from the expenses to make this deal work? We're learning that's a big mistake. Even in the golf business, you don't want to cut the payroll. Those are the people that actually make the property operate. And having one extra person may actually make the property much more money because they have time to provide service to the residents, lease up units, and take the time with the renovation. So don't just cut that short without really thinking about it. But yes, we've had pushback because we don't do things like everyone else does it. There are some owners that are so hands off, they don't even talk to the property management company but once a quarter, right? And so that's fine. But we're much more hands on. And so we want to implement new technology so we can stay ahead of the curve and ahead of the game. And to be honest, it actually, the way I pitched that whole thing was, if you update this board, even just twice a week, our management calls are going to be much shorter on Mondays. Because all I have to go in and do is read the updates that you've done. And so I don't have to ask you, where are we with this, 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 and this? I know where we are. And so all I do is I ask them to update that board twice a week. It doesn't even have to be daily. Just have it up on your desktop already all day long, like I have mine up, and just pop in and, make some notes for 10 minutes, twice a week. And our calls will be much shorter. So that's the kind of way I try and sell it.
Yeah, so they're actually saving themselves time by going in and making the updates on there.
Yep.
Yeah, I agree. I mean, we've had property managers push back every time we have them, like just a KPI spreadsheet that we want them to fill out. If they're not providing these forms, or they're not providing the KPIs in their normal reporting, we've had, hey, can you just add this one spreadsheet worth of stuff to your reporting? And we get pushback from them. I will double down on something you said. You said about payroll, and I probably should have asked this earlier, but when you're looking at the on-site managers and roles, can you dive a little deeper into that payroll thing? Not cutting payroll versus keeping more people on hand.
Yeah. So one thing we always look at, there's rules of thumbs in every market for how many people you need per number of units, right? But every property is going to be slightly different, even going down to the fact that, does this property have a lot of foot traffic and, drive-by traffic versus not? So you're going to have more walk-ins. So are the managers going to be able to handle that? When you're at that right at about 100 to 125 units, they say that's where you get your economies of scale and can have full-time full-time property management. But in that little window of 100 to 125, we found that you can operate with one maintenance and one manager, and two and two is probably too much. But I think it depends on what your business plan is. Are you going to have your in-house maintenance people turn units, or is that going to be an outside vendor? Because if it's in-house, you're putting more strain on them. Is this a property that has a ton of deferred maintenance that you need to tackle for the first 12 months? Or is it something that is stabilized, right? So there's a lot of different factors to go through. And so I would always encourage to start heavier with the payroll in the first 12 to 18 months while you stabilize a property and make sure you're setting your team up for success versus really setting them up for failure. If you only have one person in there and they need two, you're going to have a lot of turnover. That person is going to be unhappy. It's going to be very difficult for that person to stabilize the property. And look, we've made that mistake, unfortunately, and had to add more people. And it takes longer to execute the business plan on that end. So I think payroll is one of the easiest things to cut, but I don't think people understand the actual effect of the business plan when it comes to those types of things. So that's kind of example. I'm not sure if I answered your question exactly on that.
Yeah, I think you answered it very well. I mean, we've had some issues with payroll as well. The first 6 to 12 months in especially value add business plans, that's not where you want to skimp on payroll. Wholeheartedly agree. And every time, and I didn't realize this when I started underwriting properties, and it's not a question I even thought of asking my mentor because, the program I was in was focused on getting your first deal, but a lot of people, like you said, say, hey, we're going to cut payroll to save some money, but there's always a trade-off. And I think that's what you're pointing to is every time you cut your payroll, there's going to be a trade-off somewhere. If you're cutting your maintenance guy, you're going to be paying more on your maintenance bill. So, whether it's a 1-for-1 number on dollars saved on payroll versus dollar added to the maintenance. Same thing with your leasing agents. If you cut a leasing agent, now you're going to have, potentially longer vacancy periods, longer turn times and fewer applications processed, and the timeliness of processing applications can lose leads. So trade-off, I think, is the biggest point there. All right, so we are at the top of the hour. It's traditionally where we jump into our networking. But before we do, does anybody else have a question? Let me make sure I didn't miss any. Mauricio, I love that. Mauricio is asking for a friend. Okay. Do you come in as a?
You don't have to actually answer this, unless you do. Then I would like to know.
So I don't do any consulting type of work, but I am happy to help in any way I can. I'll copy and paste my calendar link in the chat. They're only 15-minute calls, but I'm happy to help any way I can and give back and try and guide you through some questions. So I don't charge for consulting. I do coach for Michael Blanc. So if you're part of that program, I could be your coach on that. But a short call, happy to help.
Yeah, asking for a friend made me laugh, Mauricio. But Daisy, were you saying something?
One last question, if you don't mind. From a very high level perspective, Kyle, I'd love to hear your thoughts on values. What are the values that you operate your company by? And how do you ensure that everybody on your team abides by those values or is aligned with you on those values?
Yeah, love the question. Thank you for that. So two things. I think having those conversations, if you're partnering with people up front and just being honest with what they are is very important. I think it's very difficult to look someone in the eye and say, these are my values. And if you don't align with them, then we can't partner. But that's essentially what you should be saying, right? And get that out of the way now versus a year or two down the line. And number two, be clear on what you really want, because saying that you want to be a double bottom line investor where it's impact investing, it's easy to say, but have you really looked into executing on that business plan, and can you really fulfill that from A to Z, right? And so one of our values is bringing A-class living to Class C housing. And I did that when I first started Limitless Estates 3 years ago. And when I got questions about it, it was not as easy as it is today for me to answer those things. And so I really encourage people to really think about, okay, that sounds good to investors, but is that really what you truly believe? And it is what I truly believe. And we have a project right now where now I can really explain it. We're trying to honestly build, we've got a new build property. We're converting an office building to multifamily, and we're going to be providing brand new units to Class C housing. Okay, so these are, 600 square foot, 1 bedrooms. but these are brand new units, never been lived in before, that are going to cost $1,000 a month. So this is really providing A-class living to C-class housing. And that's something that I'm passionate about now and want to be able to do more of. And the way we're doing it is we're not building these huge fancy Class A apartment buildings. They're not going to have a ton of amenities, but what they are going to have is very clean housing and a clean brand new place to stay. So you're not going to see an extravagant clubhouse, right? But extravagant clubhouses are huge. You could probably build 5 units in those clubhouses. And so we get 5 more units. So our building cost comes down. We get more bang for our buck so that we can keep the cost lower. And so that's something that we're doing. So that's some of my vision. Number 2, I know real estate investors get a bad kind of rap for being slumlords. It's something that I absolutely don't ever want to be. We honestly want to think about our residents first. We want to make sure that we're providing them with safe, clean housing. And then from there is where we kind of drive the bottom line. We do have to act as if this is a business, because it is, and we have investors' money, but really first does come our residents. We want to make sure that we're providing them with the proper housing that we say. So really backing that up.
All right.
Awesome. Thank you.
All right. Anybody else with questions? All right. And I'm going to just publicly apologize. I just realized I had 4 people log on right at 6 o'clock. Advertise this in like 4 or 5 different places, and it looks like one of the 5 had a time inconsistency. So apologize for people who are logging in right now, but I'll video replays coming out. I'll have the video replay posted on YouTube tomorrow. Send the link out to everybody. But that said, we're going to turn to networking right now, which, when I started attending events like this, I mean, no disrespect intended at all, but what's presented is important. But I think the connections made for me over the last several years have been much more important than what I hear and what I learned from the guest speakers. So I'm encouraging everybody to stay on if you have time to do so. And we're going to roll into networking. I will also say that if you're going to hop off and if you're not going to stay around for at least 10 or 15 minutes of the networking sessions, now is the time to hop off, because once I open the chat rooms, if people start hopping off after I open the chat rooms, it messes with, how many people are in a room. And sometimes we end up with one person in a chat room. So